Now speaking, Erica Manian, Investor Relations. Good morning. Today, I will provide a review of GLBE's business results for the second quarter of 2023. Our financial results for the second quarter will be discussed by our CFO, Ofer Koren, followed by our outlook for the third quarter and full year of 2023. I want to remind you that certain statements made today may constitute forward-looking statements, and our actual outcomes may differ from these statements due to various factors beyond our control. We encourage you to refer to our press release dated August 8, 2023, for additional information. Now speaking, Amir/A, Co-founder and Chief Executive Officer. Welcome to our Q2 earnings call. Our strong business momentum and growth trajectory continue, with our quarterly GMV reaching $825 million, a 54% YoY growth. Revenues also grew by 53%, reaching $133 million. Our adjusted gross profit margin expanded to 43.3% due to economies of scale and improved efficiency. Adjusted EBITDA for the quarter came in at $21 million, nearly double that of the same period last year. On the merchant front, we onboarded new merchants globally, including renowned fashion brands like LK Bennett, Club L London, Monday Swimwear, and Diesel. We also expanded in the APAC region, with Australian, Japanese, Korean, and Swedish brands going live. We continue to expand within existing merchant groups, such as Orveda and Givenchy Beauty. We are consolidating and streamlining our platform stack post-acquisitions and migrating legacy Shopify-based enterprise merchants onto our new native app. We are also preparing for the release of Shopify Markets Pro in the US later this year, which has shown promising results during early access. To support our growth and product development, we are expanding our technological and commercial teams globally. Our adjusted EBITDA, a proxy for free cash flow, is outpacing revenue growth, demonstrating our commitment to responsible and sustainable growth. Now, I will hand it over to Ofer to provide more in-depth details on our quarterly figures and updated guidance. Now speaking, Ofer Koren, Chief Financial Officer. Good afternoon, everyone. Thank you for joining us today for our quarterly earnings call. We are pleased with our business performance and progress in the first half of 2023. Q2 was another strong quarter of fast growth, with $825 million of GMV generated on our platform, an increase of 54% year-over-year. Our total revenues for Q2 were $133.3 million, up 53% year-over-year. Our non-GAAP gross profit was $57.7 million, up 58% year-over-year, representing a gross margin of 43.3%. Adjusted EBITDA totaled $21 million, growing 90% year-over-year, representing a 15.7% adjusted EBITDA margin. We ended Q2 with $224 million in cash and cash equivalents. For Q3 2023, we expect GMV to be in the range of $840 million to $880 million, representing a growth rate of 38% compared to Q3 of 2022. We expect Q3 revenue to be in the range of $136 million to $142 million, representing a growth rate of 32% compared to Q3 of 2022. For the full year of 2023, we anticipate GMV to be in the range of $3.48 billion to $3.64 billion, representing 45% annual growth at the midpoint of the range. Revenue is expected to be in the range of $570 million to $596 million, representing a growth rate of nearly 43% at the midpoint of the range. For adjusted EBITDA, we are expecting a profit of $85 million to $93 million, a significant increase of 21% compared to our previous guidance at the midpoint of the range. In conclusion, we continue to focus on strong execution, enhancing our platform, and expanding our offering to create value for merchants in their direct-to-consumer cross-border expansion. Thank you, and we are now ready to take your questions. Raymond James analyst Brian Peterson inquired, can you highlight any notable trends in GMV linearity, either by month or region, that were particularly strong during the quarter? Additionally, are there any significant differences in performance through July compared to the second quarter? Ofer Koren replied, yes, we experienced robust growth in the second half of Q2, primarily due to successful product launches and promotions by our key merchants. Additionally, Europe has shown resilience and contributed significantly to our overall growth, compensating for weaker performance in certain APAC markets. The US market has remained relatively stable during this period. Raymond James analyst Brian Peterson inquired, can you provide insight into your plans for investing in the platform and driving growth versus focusing on margin expansion, considering the increase in EBITDA margins? Amir/A replied, we are focused on reinvesting in our platform to capture the immense market opportunity ahead. We have multiple avenues for growth and are committed to expanding our EBITDA margin in the long term. In the shorter term and midterm, we strategically invest where we believe it will enhance the long-term value of our business. Piper Sandler analyst Brent Bracelin inquired, can you provide an update on the progress and key takeaways from the early trials of Markets Pro? How does this inform our outlook for next year? Amir/A replied, yes, we have been working closely with Shopify and have conducted multiple outreach efforts to batches of merchants. Through this process, we have gained valuable insights and made significant improvements. While our offering and product were already performing well, most of our focus has been on perfecting the onboarding experience for merchants and automating various aspects of their day-to-day management on our platform. This is crucial as we anticipate a large influx of merchants once we reach general availability. We have made tremendous progress during the early access period and plan to implement these advancements moving forward. Piper Sandler analyst Brent Bracelin inquired, can you provide more insight into the improvement in fulfillment margins this quarter? Was this due to seasonality or is it a result of structural or operational improvements? And how should we expect fulfillment margins to perform in the future? Oferkorn replied, our gross margin has improved this quarter due to operational efficiencies and a higher share of service fee revenue. We anticipate this stability to continue for the remainder of the year, with potential gradual upside in the longer term. This is driven by the growth in service fees and fulfillment revenue. Jefferies analyst Samad Samana inquired, can you provide an update on the performance of Borderfree customers now that the acquisition has been completed? Specifically, how are the NRR trends within this customer cohort? Do you anticipate that their NRR will eventually align with the overall NRR of your regular customer base? Debbie replied, we are pleased with the progress we are making on the Borderfree acquisition. We are building marketing capabilities and tools to launch it across our entire platform, with early access expected later this year and general availability in Q1-Q2 next year. We have already started utilizing the logistics capabilities of standard delivery into Canada using Pitney Bowes. Client migrations are expected to begin in late Q4, with a significant number of clients migrated by mid-next year. Once the migration is complete, we anticipate significant growth from the unique capabilities of the GLBE platform. We expect to start seeing growth from Borderfree clients within 2024, with some growth potentially occurring in 2025 as clients migrate mid-year. The growth profile for Borderfree clients is different from our core platform, with Borderfree clients having a lower growth profile. This may impact our results in the coming quarter, but we expect it to change once they migrate and contribute the same profile as GLBE clients, hopefully by mid-next year. Jefferies analyst Samad Samana inquired, can you provide more insight into the confidence and visibility you have regarding the implied fourth quarter ramp based on the 3Q GMV guidance? Is this strength primarily driven by new customers or existing GMV trends? Oferkorn replied, our Q4 guidance is based on the visibility we have gained throughout the year, with the understanding that peak season volatility could impact our results. Our plan is centered around clients that have already signed, and any clients that have not signed by now are not expected to go live this year. The full-year guidance includes the anticipated contribution from Shopify Markets Pro in Q4. Looking ahead to 2024, we are hopeful that Shopify Markets Pro will make a significant impact on our business. Morgan Stanley analyst James Fawcett inquired, can you discuss the process for merchants who already have cross-border activity and operations in terms of their adoption of Shopify Markets Pro? Will they transition quickly to Markets Pro or continue with their current operations and add Markets Pro for new markets? How are you preparing for this from the merchant's perspective? Debbie replied, yes, we anticipate that merchants who are currently engaged in cross-border operations or those who are not yet involved in international trade will find our Markets Pro offering highly attractive. This comprehensive suite of capabilities provides a seamless and straightforward way to enhance their global reach. By enabling merchants to easily activate these features, we believe it will be a compelling solution for those who are currently managing international trade independently or relying on third-party platforms like Shopify. We expect a significant number of merchants to adopt this more holistic solution. Morgan Stanley analyst James Fawcett inquired, what controls the pace of penetration in onboarding? How much input does GLBE have in the sales process? Can merchants onboard immediately and simultaneously? What are the limitations on adoption? Debbie replied, yes, the adoption of our product will be gradual and dependent on various factors. Initially, we will focus on the U.S. merchant base before expanding into other territories. The adoption will also vary based on the specific products and locations. Ultimately, the merchant's choice will play a significant role in the adoption process. Needham & Company analyst Scott Berg inquired, can you provide insights into the drivers behind the strong growth in your U.S. outbound sales, particularly after the acquisition of Flow? Can we expect similar growth from this solution in the next 12 to 18 months? Debbie replied, our growth in the U.S. is driven by both the focus on the U.S. consumer through our Borderfree platform and the success of our U.S. brands. The mix of celebrity brands and direct-to-consumer (D2C) first brands in the U.S. market has contributed to their higher growth profile compared to legacy brands. Additionally, we are seeing continuous adoption of our solutions by U.S. merchants, further supporting our growth. We expect this growth to be accelerated with the general availability of Shopify Markets Pro for U.S. merchants. Needham & Company analyst Scott Berg inquired, Ofer, can you provide an updated view on the gross margins as the business scales? Is there potential to outperform the target level of 50%, or should we continue to expect that as the benchmark? Ofer Korn replied, we are pleased with the gross margin this quarter, driven by revenue mix and operational efficiency. We are focused on leveraging our scale and improving over time. We anticipate similar levels for the remainder of the year, with gradual potential upside in the future. While not expecting 200 basis point growth every quarter, there is additional potential for gross margin improvement. KeyBank Capital Markets analyst Maddie Shrega inquired, could you provide further commentary on the reasons behind the higher average order volume and any potential tailwinds in specific verticals? Ofer Korn replied, there are two main factors driving the increase in average order value growth in Q2. Firstly, it is a consumer trend where we have observed a pause in Q1 followed by higher growth in Q2. This indicates that the blip in Q1 has translated into higher average order value growth in Q2. Secondly, specific segments have shown varying performance. Digital native brands have been outperforming, luxury has remained solid, while department stores have experienced slower growth. These are the key observations for the past few months. KeyBank Capital Markets analyst Maddie Shrega inquired, are you seeing any impact on your demand generation or sales cycles on the enterprise side due to the restrained enterprise IT budgets this year compared to last year? Near Debbie replied, our Q2 bookings showed strong growth, making it the strongest first 6 months of the year in terms of new GMV bookings. We are expanding our partnerships and seeing new bookings from regions like APAC, specifically the Nordics, Sweden, Denmark, and Italy. We are optimistic about the pipeline we are building and pleased with the results in Q1 in the first half of the year, which support our midterm growth. Autonomous research analyst Matt Code inquired, could you please explain the reasons behind the decline in your service fee take rate on a year-over-year basis and provide insights into your future plans for the take rate? Ofer Korn replied, the service fees take rate has been stable and we expect it to remain stable for the rest of the year, with potential for growth from value-added services. The fulfillment take rate was lower this quarter due to higher average order value and the gradual growth of multi-local, which doesn't require our fulfillment services. We anticipate the fulfillment take rate to stay similar in the back half of the year, with potential upside in 2024. The higher share of service fees positively impacts gross margins, resulting in less impact on gross profit. Autonomous research analyst Matt Code inquired, can you provide any insights into the decline in the free cash flow conversion ratio this year compared to last, specifically in relation to factors such as working capital or any other notable considerations? Ofer Korn replied, yes, the slow start to the year was primarily due to timing and cutoffs. As a result, we are still behind in Q1. The dynamics were not specific, but rather related to timing. However, we anticipate that adjusted EBITDA will eventually translate into free cash flow. While there may be fluctuations from quarter to quarter, we expect it to converge over time. The benchmark company analyst Mark Skowix inquired, what level of conservatism have you built into the implied fourth quarter for Markets Pro and how much visibility do you have there? Ofer Korn replied, our guidance remains consistent and we have better visibility for the full year as we approach the end of the year. This is reflected in our increased guidance. Shopify Markets Pro is still in its early stages, but we see positive trends and anticipate it will start contributing in Q4. While its impact in Q4 will not be significant, we expect it to have a significant impact in 2024. The benchmark company analyst Mark Skowix inquired, can you provide some insight into the expected growth in your enterprise pipeline over the next 12 months from direct versus indirect channels? Near Debbie replied, yes, we have observed a significant increase in indirect sales leads from our expanding partner network. This trend is expected to continue as we onboard more partners into the GLBE ecosystem. While our internal teams, including our demand generation and sales teams, continue to grow, we anticipate a continued growth in the percentage of sales coming from indirect channels. JMP Securities analyst Austin Cole inquired, can you provide insights on the growth in the U.S. market, considering recent economic data and trends, and your plans for adding new merchants and expectations for future growth? Near Debbie replied, we have experienced strong growth in the U.S., surpassing other regions and gaining market share. This growth can be attributed to our acquisitions of Flow and Borderfree, which primarily consisted of U.S.-based merchants. Additionally, the rapid growth of direct-to-consumer, D2C, and celebrity brands has contributed to our success. The U.S. economy is also showing promising signs, with solid businesses opening and expanding, which is driving demand for these brands globally. We anticipate this growth to continue, although not at the same pace as our enterprise segment. The release of Shopify Markets Pro in the U.S. will further accelerate this growth, increasing our market share. However, as we expand into additional regions by 2024, we expect the distribution of growth to balance out. Amir/A replied, "Thank you for your continued support. We are excited to provide you with updates on our future earnings calls. Goodbye and take care."